Hey everybody, it's good to be here. My name is Brent Moores. It's time for Advanced Option Strategies. This week, we're going to continue and expand our discussion for last week where we introduced you to calendar spreads. This week, we're actually going to tackle double calendars. Now, that may sound very intimidating. It's really not that big a leap from what we did last week. But if you haven't seen last week's session, stick around, watch this session, but you can always go back and watch last week's sessions, which was more of an introduction to calendar spreads. Now, before we get too far into this, let me just mention a couple things. One, actually, Cam is helping me out in the chat today. So Cam is an instructor here. He's taught many classes on multi-leg option strategies and managing option portfolios. So he's very knowledgeable. And as you have questions, feel free to type those into the chat. And between Cam and myself, we'll do our best to help you out. Also, you can follow Cam on X. You can follow me on X. It's just first name, last name, CS. So at Brent Moores, CS, at Cameron May, CS are our Twitter or X handles there. Now, options do carry a high level of risk and are not suitable for all investors. And the information today is for general purposes only. It's not any recommendation. We'll be looking at individual symbols today. We'll be looking at individual options today. Those are not recommendations. The paper money application is for educational purposes only. And it's a great tool, but it does have its limitations. All investing involves risk, including risk of loss. Rolling strategies can entail additional transaction costs. Also, here we're dealing with multi-leg option strategies in this class, and multi-leg option strategies, because there's more contracts involved with multi-leg option strategies, you end up with more commissions. So just be aware of that, factor that in, and I think we're good on that, okay? So let's go on, and I'll be using the Thinkorswim platform today, as we usually do in this class. And so I'm going to bring that up here. And here's the S&P 500, and you can see we're positive on the S&P 500. We've had a pretty strong trend. In fact, when this is what's happening in the market, and it doesn't matter, I could look at the IndyX, or I could look at the Russell 2000 right now. I'll do the right here for a sec. Here's small caps. But when you see this in the market, a lot of stocks are following the same path. A lot of them have been going up. In fact, as you do look at this, well, you can look at it and you go, whoa, we kind of had this like flag pattern, right? Up, kind of sideways, up, sideways. Some people will actually be looking for a breakout there. That's a little bit more of a directional trend on that, right? Well, when we're talking about calendar spreads, which are more of a neutral trade, this is probably not the pattern on the individual stock that we're looking for, right? We're looking for more of a neutral trade. Now we can skew that calendar, as we've talked about in last week, to be a little bit more bullish or a little more bearish, depending on the strikes we choose. But that's how it goes. You can have more, it just kind of happens that the last few weeks, because I'm trying to cover some basic topics on this, some foundational topics, we've concentrated on more neutral type stocks and more neutral type strategies, excuse me. And, there are more bullish strategies and more bearish strategies. But just as a reminder, as we're talking about this, calendar spreads are more of a neutral, as we mentioned. They're theta positive. They take advantage of time decay, which is great. That's what we want, Now that sounds great. That's usually what we want, but there's pros and cons. Some of these strategies that are more time decay helpful, in other words, theta positive, the challenge with them is if the market does run strong, you may be better off with a strategy that is maybe a theta negative strategy. So for example, let's say the market's going to go up and we just buy a long call. Well, it depends on the call you buy, but even though you're losing some in the time decay process, maybe the move in the market or the stock is enough to overcome the time decay degradation, if you will, and you'd be better off with that. So, there's a lot of different strategies with options, and that's, today we're talking about one that is time decay positive, theta positive, excuse me. where it's helpful. Calendar spreads are debit spreads, and we're going to pay some money up front on those. We're going to sell the near month. We're going to buy later month. Again, we reviewed this last week. You can review that if you want. And they're vega positive. In fact, I have implied volatility on the screen here, and I'm going to leave that on as we look at individual stocks. But let me just make a generalization on implied volatility right now. Don't look at the implied volatility at the bottom of the screen, but look here at the VIX. This is volatility on the S&P 500 contracts, and you can see we're low. In fact, we are at the low. Actually, right now, we are at, here's a 9-month low. Let me go back a little. Let's go to 3 years and see where we are. We're at a 3-year low as we speak, it appears, on the VIX. Now, that's not true for every stock, but basically what we're saying is implied volatility is low, has been low. And we can go back. If we go pre-pandemic, we'll find some levels lower than that. But 12 is pretty darn low on the VIX. And so it helps if we do a vega positive strategy, which is what we're doing, in the sense that it will benefit us if implied volatilities reverse ourselves and they go up. That would tend to benefit the trade. All right. So the premise I want to talk about two things. I want to talk about actually doing the double calendar today, but I also want to talk about finding them. How do we find neutral trades? And what I want to do is I want to do a scan together with you today. Some of you may be familiar with these scans. Some of you maybe not. Let me just kind of start out from scratch here. And so to do a scan on Thinkorswim, we're going to go to the Scan tab, and we're going to go to Stock Hacker. I'm doing the scan on the underlying stock. I'm trying to find underlying stocks here. Now, there are different scans that we can do. There's Option Hacker, there's Spread Hacker. I'm going to, in the next few weeks, we'll probably go through the Spread Hacker with you. Okay. You may find that valuable. To be very honest, I don't use the Option Hacker that much. Generally, for options trades, I find it most beneficial to look at the underlying stock, looking at the technicals and characteristics of the underlying stock and not at the options themselves. Now, once I find the stock that looks desirable, then we'll look more specifically at individual options. Okay? I'm hoping that's making sense. So we're going to go with Stock Hacker here. And what I'm going to do is I want to find a more neutral type trade. Okay? A more neutral type stock, a stock that has not been trending hard. Well, as I showed you at the get-go of this session, the market has been trending more lately. So we're going to narrow it down a little bit. Now, there's different ways to do it to find neutral trades. I'm going to do one that I've never done before in my classes. And actually, it's really simple and easier than neutral type trades that I've done in the past. So in the past, I've kind of built these scans based on stocks using moving average envelopes. And you can try this out on your own. I don't have time to go through it today, but using moving average envelopes, saying, well, what's a moving average envelope? Basically, if you have a stock, let me do this. Let me just pull up here. I'll just look at the 20-day moving average, which is in green here. Okay, a moving average envelope is basically you have your moving average, and you have a band above it and a band below it. And basically for neutral type trades in the past, I've looked at multiple moving averages and saying, hey, I need this stock to be within those bands. So near the moving average, in other words. So near a 20-day, near a 50-day, near a 100-day moving average. And that usually does a pretty good job at giving you neutral stocks. But that's not the approach we're going to take today. Okay? What I'm going to do today is I'm going to use an indicator that's called the ADX, okay? And the ADX indicator is one that just basically tells you how strong a stock is trending. And let me do this. Here's the S&P 500, and the ADX is just an indicator, you can go up and click on your little flask and you can type, it's the very top one, ADX, okay? And you can pull that up and there you go. And you can see this ADX is going up. It's up near 40. That is showing more of a trending indicator, okay? More of a trend on what we're looking at. ADX isn't directional. So the ADX it could be an uptrend or a downtrend, and you'll see higher ADX values. But the premise of this scan I want to run is we're going to be looking for a low ADX, which means it's not trending, because we're trying to find stocks that are not trending. Now, as I build this scan, I want to give you 3 heads ups. And these heads ups are going to be applied to any scan you do, not just these kind of neutral scans. Number 1, it's not a recommendation, okay? The stocks that come up aren't recommendations to buy. Number 2, the scan is a starting point to give you stock ideas, but not every result is going to look great. I've never found the perfect scan, okay? And so when you have a scan, hey, it's a great starting point, but don't put too much weight into it. We're just trying to narrow down that list. And number 3, and this is kind of a newer thing, and that is there's some of you out there are using Schwab Thinkorswim, and there's some people out there that are still using TD Ameritrade Thinkorswim. I'm going to create this scan and I'm going to share with you the link for the scan when I'm done with it. Okay. You can choose to use it or not. That's fine. It's not a recommendation. But the link I send will be good for the Schwab version of Thinkorswim. It's not going to work on the TD Ameritrade version of Thinkorswim. Therefore, if you're using the TD Ameritrade version of Thinkorswim, you can build the scan along with me as I'm building it, or at least take notes enough so that you can build it on your own after, and then you'll have your own version of the scan. I'm hoping that's making sense. Everybody okay? So let's do this. I'm going to start off with a couple parameters that I very often use. I'm going to start with S&P 500. Okay, and I'm also going to intersect it with penny increment options. Penny increment options under the P's right there. By doing this, S&P 500, or you could do S&P 100 if you want to narrow it down a little more, and penny increment options, we're limiting it to stocks that are probably more appropriate for options trades. Penny and increment options means those stocks are going to have options that can change by the penny in terms of pricing and not jump, make these quantum leaps from 10 cents per price increment or 5 cents per price increment. They can price to the penny, and those are generally going to be more liquid options that are going to give you better pricing possibilities there. So that's why I did this. I don't care if you're doing a bullish scan or bearish scan or neutral scan. I think these are criteria that you may consider. Okay, now let's go. So that's the first thing. Now the next thing is I'm looking at doing calendar spreads. I don't want really super low price stocks. I'm not going to be super particular about this, but I'm just going to add a filter. I'm going to click on add filter, click on stock, and I'm just going to go to last price, okay? Last, and I'm going to say $20, okay? At least $20, and I'm not going to even put an upper end on there. You can, it doesn't matter. I mean, look, I'll put $800 or something. It doesn't matter. You can do something lower there, or you can leave it blank. Doesn't matter. So when I scan, I come up with 140 stocks. That probably didn't narrow it down much because most stocks on the S&P 500 are $20 a share. There are some exceptions there on that. Let's move to the next one. For this trade in particular, I don't want companies that are about to come out with earnings. Now, this is a parameter that it doesn't matter, bullish, bearish, neutral, a lot of people, a lot of traders like to avoid earnings. Now, sometimes you may deliberately target earnings, but for our purposes, I want to avoid earnings today. Theoretically, you can trade almost any trade in front of earnings. options prices should be, take that into account. But practically speaking, many traders like to avoid earnings. Okay, so let's do that. How do we avoid earnings here? I'm going to show you this. In fact, this is, let me give you another little caveat here as I click on add filter, and I'm going to go to a study filter. And that caveat is this will not work on paper money when you start adding study filters in there. If you're on paper money and you try and add a study filter, it's going to give you an error message. It's going to say you can't do it. Okay. But what I'm going to do is under the study filter that gets added, I'm going to go down to corporate actions, earnings, and I'm going to say it does not have earnings anytime. And I'm going to say in the next 21 bars. 21 bars is essentially a month's worth of time. Okay, a month's worth of trading, about approximately 21 trading days in a month. Okay, so I'm avoiding earnings. I'm looking for stocks that tend to be more liquid stocks, and I'm going to even up the liquidity, and I'm going to add in a volume parameter here. And let me just give you a caution here. If you click on add filter, you can go to stock, and I think there's one that says volume, but that is today's volume. That's not what I'm going for here. I'm going to get an average volume. So again, what I'm going to do is I'm going to go up to study filter, click on add filter, click on study, and I'm going to go down to volume, average volume, and just leave it at 50. Simple, moving average of the volume is greater than, and I'm going to make this 5 million. Okay. Do I have the right number of zeros for 5 million? I think that looks right. Okay. There we go. Now let's see what we got. I'm down to 74 stocks, more liquid type stocks. Now there's one more thing, because we haven't done anything about the whole neutral, not neutral thing. I'm going to add in that ADX study. Now I'm going to click on add filter. I'm going to go to study, and it's not ADX crossover. I'm going to go to custom, and this screener just came up. Let me move this over. Here we go. Let me delete that, and we're going to add a condition. And I'm going to say, what do I want? Well, I want the ADX to be below a certain level. ADXs, when they're like above 30, 40 range, indicate stronger trending stocks. ADX 20 or less, not much trend in that stock. So what I want is I want the ADX, and I wanted the ADX. So that's not a value, that is a study, ADX, okay? And just the very first one there, ADX, okay? And I want the ADX to be less than, and to be a value. And I'm just gonna start with 20, and we may tweak that a little bit here, okay? So let's save that, and let's see how many results we get, and we may tweak it a little bit here, okay? So I'm gonna click on scan, okay? And here we go. Okay, now we got 17 results. That may be a few more results than what I'd like to see. I'm gonna knock that down just a little bit, maybe. Instead of 20, let's see, let's go down. I'm just gonna tweak this just a little bit. Now, there's no right or wrong here. You guys can, play with this, okay? Let me try 17 here. Save, click OK. Let's scan that. Okay, we're down to 9. Okay, we got 9 results here, and really 8 results, because I'm going to consider the 2 different classes of alphabet shares to be the same thing here, but that's a decent number to go through. Okay, and then what we can do is, because the reality is you're probably going to look at some of these and go, I'm not loving it. It's not floating my boat there. I'm not loving it. And so you want to look through others. That's why you don't want to run a scan and come up with 2 results typically. You want more than that. All right, so let's do this. Let me just check out earnings here. Not earnings, check out the comments here. Cannot see the earnings under the study. Earnings right here. Yeah, I'm not sure. Yeah, studies do not work on paper money, okay? Wiley said that, and just to reiterate that, studies do not work earnings do not work on paper money. So if you go to add filter, study, click on it, it's under corporate actions, and then earnings. I may not have mentioned that. I may have just said earnings. Go to corporate actions first, okay? Let me get rid of this one because I don't want that one there. Okay, hopefully that helps. Salim. George says, for a double calendar, long strikes will be 30 to 50 days till expiration. So should we go 50 hours? Okay, so yeah, we're going to go out. So there's short strikes, long strikes, but remember, we're going to be not holding this all the way to expiration. George is saying, look, if I don't want earnings here, maybe you don't do the 21 bars. Now, keep in mind, 21 bars is not trading, 21 bars is trading days, it's not calendar days. Okay. So if I look on the calendar and say it's 30 days till expiration, really that's more like 21 bars. You can tweak that up a little bit there, George, if you want. I have no qualms on that. And so that's play around with that. I'd encourage you all to play with this as we do this. Okay, so let's run the scan, and let me share the scan here in our chat. Okay, and I'll talk a little bit more about ADX because I realize I went through that really pretty quickly here, and there's a question on that. Let me share this scan. Oh, actually, I'm going to save it first of all. Okay. And when I click on that, it brings it up in another screen, and I'm going to call this ADX neutral scan. Okay. I don't know if that's the best name, but we're going to call it that. And now we have ADX neutral scan, and I'm going to share this scan query, and let me do it this way, ADX neutral scan. You can rename it on your own if you want. Share, click on that. And I'm going to throw that in the chat. Okay. Control V. And just remember, scans are not guaranteed for accuracy. Okay. Not guaranteed for timing or accuracy that I put in there. And what I'm going to do is, let me just do this. Actually, let me do this. I'm going to put this on my screen. Well, I don't know what the best way to do that is. There. For those of you who are watching on a recording and want this, you can pause your screen here on your YouTube, and you just need everything from the exclamation point, ELSPZKLU. It is case sensitive though. So you need the capitals to be capitals, the lowercase to be lowercase there. Okay, that's how you do that. When you get that, and what you're going to do is you're going to go up here to the little gear, click on open shared item, paste it in there, click on preview, and import, okay? And then it will show up when you come to your scans and go load scan query under personal, you should see it sitting there. All right, so there's that. Let me go back to where I was. Here we go. And we've saved that. Now, kind of the neat thing is, what we can do is, I'm going to bring it up on the left-hand column, and I'm going to go to my personal, and we should see ADX neutral scan there, and it should bring up our symbols. And now, I think this is linked. Yep, it's linked to my chart. We can go here, and we can look at our stocks. Okay, here's Google or Alphabet. We're looking for more neutral. Now, here's our ADX. ADX values, different people will have different ideas of exactly what constitutes trending. But if you're above 30, typically that's more of a stock that's more trending. If you're below 20 to 30 is more kind of neutrally, maybe not so much. Below 20 is when we're really not trending that much. Okay, so there's not an exact cutoff. I said, I'm saying 20. I think our scan we put in 17 is what we ended up with. And you can see where Alphabet is here. And you can see that also that we have, you can kind of look for, do your normal technical analysis. We could say, oh, probably got some resistance in that area. Maybe some support down. It's not liking my line now. Let me try that again. I don't know why my trend line is not. Huh. There we go. Okay. Maybe some support down there. Okay. So, but you don't have to do that. Let me just clear that out. Okay. A little more neutral. Let's see what we got. Alphabet again. Okay. Pepsi. I don't know. I mean, that one isn't the epitome of neutral. A little bit more neutral lately. Fair enough. Was trending down here. So maybe that's not the exact one we want. Merck has been relatively neutral. I mean, kind of it's been trending. It was trending down on this as we look at this, but it looks like we've broken above that there. Okay, and we'll go to applied materials. Yeah, that's a little bit more on the neutral side of things as compared to a lot of the market. Right? TJX. Oh, that looks quite neutral. Now, just because I'm saying it's neutral now doesn't mean it's going to be neutral in the future. In fact, we did what was an iron condor a few weeks ago that immediately, like the minute we bought it, it took off on us, and it's just gone up strongly since. And we've been trying to manage that. We'll try and, if we have some time, we'll try and look at that again later in the session here. Here's Tesla. Okay. Yeah, a little bit more neutral, I'd say, kind of more neutralish. Meta, I don't know. Some of me like, some of me maybe not. Yeah, I'd say that's a little bit more neutral. Okay. Of what I've seen here, I think TJX was like beautifully neutral. Okay, very neutral. Alphabet. Okay. Alphabet was pretty neutral too. So what we can do is, let me remove that drawing. We can look at these as candidates for our double calendar. Okay. Here's our scan, just because we have a request to view it again. Let me just shrink this down here. And let me just jot down before I forget. We said TJX and Alphabet were maybe the initial ones we'd look at. And you can look through some of the others. Okay. So that's the scan. If you are want to create that on your own, if you don't want to use the shared link that I had there, or if you're using Thinkorswim from TD Ameritrade and you can just add in these parameters. Remember, the parameters aren't just these parameters right here. They start up here, S&P 500 penny increment options, and then stock filter, last price, and then 3 study filters. Okay. There we go. Okay, but we're more neutral here. In fact, let's go. We're looking at Alphabet. You can see that ADX is relatively low. I'm going to go to the Analyze tab. We've got Alphabet there, and I'm going to go. Let's add in a simulated trade. Okay, let me just look real quick and make sure I don't have anything. Yeah, I don't have anything in there right now. Okay, and I'm going to go out, and remember, a double calendar, we're selling near term, buying later term. Selling near term, buying later term. The theta, which is going to be higher near term, is going to be more significant than the theta for the later month, and therefore that theta that we're selling up front is going to lead it to be a theta positive trade overall. Oh, one other thing I should probably mention here is, in addition to the ADX, what you can look at is, actually, let me do this. I'm going to take out that ADX, and I want to throw on implied volatility there, because, ideally, implied volatility is low, and which we have here. There's our implied volatility on Alphabet, presumably before the next earnings. I mean, here was the last earnings. Implied volatility climbed up. Okay, here was the earnings before. Implied volatility climbed up, and it was already relatively high on this one here. So no guarantees, but it went up there again. Okay, no guarantees, but it could could certainly go up, head up closer to maybe the 40 range before earnings. Okay. All right. Let's see. We're going to the Analyze tab, and we're going to sell. I'm going to sell out. Maybe I'll go 21 days. We'll look at quarterlies here, and I'm on Add Simulated Trade. And the position I'm going to do on the double calendar. Let me just kind of remind you. Where did my drawing tool go? Oh, there it is. Remind you, on a typical single calendar, the risk profile kind of looks like this. It looks kind of like a tint, okay, almost, right? And it'd be something kind of like that on a calendar, right? This being your break even and this being your max gain. Your max gain is where your initial strike is, okay? Your strike is, because there's only one strike, 2 different months, same strike. That's your calendar spread. We want the stock to be where your strikes are, okay? It's going to look a little different on a double calendar. So if I do what a double calendar is going to look like, it's going to look kind of like this, okay? So if you start the stock out, let's say our initial stock price is kind of in between, you actually will benefit if the stock moves a little bit to the left or a little bit to the right, up or down a little bit, okay? Up or down a little bit. And so, well, let's just take a look and see, okay? So this scan that I just did was, I just titled it ADX, what did I just title it? ADX neutral scan, for those of you in the chat, ADX neutral scan. Okay. So let's go. So where do we want those peaks? Well, you can tweak, you can do them more higher prices or lower prices, but I'm going to look somewhere in the range of a 40 delta on those. So on my put side, I'm going to be looking down here for my delta, and roughly 40. Maybe we'll do like the 135. It's 38. Okay, close enough. I'm going to sell that, so I'm going to click on the bid price. On the call side, so that's 135. And then on the call side, again, I'm going to look for like a 40 delta-ish, and we got one right on the nose, 40 delta, and I'm going to sell that one. And then I'm going to go to a later month. I'm going to go out to maybe 42 days out there, later expiration. Okay. And what did we say? We said 135. You can see that down here, 135. We're going to buy that one. And 139, we're going to buy that one. And you can't see it very well. Let me do this. You see down there, there's our double calendar. Let's see let's go back up to risk profile. Okay, there we go. So it's not a perfect, perfect tint. Let me zoom in here, but you can kind of see the double peak. It goes down a little bit and down. Here's the current price. You see that little dash there? Maybe a little bit hard for you to see on my screen, but right there, that's that. Now, there's a question in the chat, and that's a question that I actually don't know the answer to, because I usually don't use the templates there. But can you go here, and is there a double calendar? No double. Oh yeah, there is double diagonal, double calendar. So if you want to do it that way, you can do it that way. So there's the double calendar if you want. But I usually, when I'm adding, well, I'll show you in a little bit how I usually add those in when I do that trade. We'll actually enter the trade maybe. But realize when you put this in, you can tweak the prices. If I tweak these out from 135, 139, my little peaks are going to go out further, right? So if I go 134, 134, 134, oh, it's not traded. Okay, so I can't do 134 on that. You see that? It says not traded. That's why the whole graph went scawampus there when I did that. Let me try that on the other side. What if we do 140? We probably have 140s on both sides. Okay. So if I go to 140 and 140, there we go. You see those peaks have now widened out a little bit there on that. Okay. There we go. So you can tweak these out that way if you want. And typically if you tweak them out farther, left and right, typically the break-even points will move out a little bit farther, typically. But no, you just got to double check. You can see where those break-evens are. Okay. On my graph right now, I've got a break-even at expiration. Okay. Break-even at expiration, right close to just under 143 and a little bit above 133. Let's look at the graph and see if that makes sense. 143, and I'll just draw a couple lines here. 143-ish, we'll say that, and 133-ish, right about there. Those are our break-even points here. Okay. So, maybe you think it's going to stay there, maybe you don't. You can always tweak the prices down. Now, I tried, the 134 wasn't an available strike, so maybe I can go down to 133 or something like that, and that may push that bottom. Depending on the strikes, I can push the whole thing down, can I? So instead of doing a 140, 135, I could do a 139, which is where we started, say 133. I don't know if there's a 133 strike, but you could do that. If you do that, this whole thing is going to shift to the left a little bit there. Okay. So there we go. Okay. There we go. So change the expiration date at the top. Well, we're going to change that to what was our date? 29th of December. We'll go to the 30th of December there. Okay. So there's your probability. So slightly better than 50-50 on that. Okay. In terms of probability. That's that's that trade as we got it right there. You can tweak these as you tweak these. Actually, let me set my slices to break even. So slices, break even. There we go. Yep, that's more correct. So 57% probability, and probabilities are probability. They're not guarantees, right? They're just a mathematical probability on that. So it is slightly on the higher probability side of things on this. Remember, multiple contracts, multiple commissions. Okay, multiple contracts, multiple commissions. Now, especially if I start ramping this up and doing, look, here's 2 contracts of each. Now I have 8 total contracts there. More commissions on that. Okay. So let me just jot this down one sec. 135, 140, and we were going 21 days and 42 days, I think that was. Okay. So now going back to the comment earlier, yeah, you could use that double calendar template if you want. You could also, what I normally do is I just do it this way. I go here and I go say, we're going to sell that 135 put. I click on the bid price, 135 put. I go to because I'm kind of working this through and looking at 140 call. I'm going to sell that, but I'm not just going to click on that because it would just replace the other one. So I hold down my control key and then it adds it. You got to hold down that control key. And then when I go out to my later month, which was 42 days here, 135 put, we're going to buy it. I'm going to hold down my control key, click it, and the 140 strike again, I may look for like the delta or something here on this. I'm going to click on my ask price, hold down my control key, and there's my trade there. All right. Okay. So that's how you enter that. Question, can I show the Greeks? Yeah, price. Here we go. Let me go to, so those are the Greeks. Let me just add in a leg here so you can see the current price is here. Delta, slightly positive delta. Why slightly positive delta? Because we're closer to the left side of the strikes than the right side. Okay, we're closer to the lower break even than the upper break even. But it is a little weird because at the trade, even though it's a positive delta, if the stock goes down a little bit, you're actually probably in a better shape there because at expiration 135 would be a great position for it to be at. There's your positive theta that we talked about. Theta diminishes a little bit if the stock goes up or down. Okay. And there's your vega, positive vega. Okay. So a double calendar is not a vertical spread. No, it isn't. A double calendar is not a vertical spread. It was a question in the chat. Vertical spreads, and I'm running a little low on time. Vertical spreads are all within the same month, same expiration month. Here we've gone to different. This is a time spread. It's over different months. So here was our trade, and let's see if we can put that in. I'm going to confirm and send that, and I'm going to put this in our multi-leg options one there. Okay. Let's see. Now, in terms of management, typically we'll look to roll these out or close these. And remember, I mentioned before, rolling. It doesn't save you commissions to roll. Rolling is you're getting out of maybe the front month and moving to a later date or changing strike prices or something, but you still got to pay commissions on those. If those short options become worthless, we're going to look to close it out. Once we get near expiration, near the front month expiration, 4 to 10 days maybe, we'll look to close it out or roll. Okay. If earnings is about to come out, we may look to avoid the earnings. You don't have to. That's a thought on that. If the stock's trading near the strike with 10 to 20 days before expiration. Now, we're starting out with 21 days, so this is kind of a shorter term one. So we're gonna have to wait a little bit. You got to be kind of patient on these. Okay, you got to be a little bit patient on these as you do that. But we got the trade in there. All right. So we go through the same process. I know one of you was asking, hey, let's look at it was Tesla, I think. Tesla was on the list. Well, I'm not going to be able to go through the whole thing, but let's look at it real quickly. TSLA, Tesla, kind of neutralish, it seems like, the chart there. Are IVs low? I don't have the ADX on here, but I expect the ADX would be pretty low given that I know it's 17 or less because that's what our scan was. And so for a calendar spread, typically we're going maybe 20 to 30 days, maybe on the front month, somewhere closer to 50 on the back month. And there we go, we just filled on our other one. And remember, for the double calendar, we're probably looking somewhere in the ballpark, somewhere in the range of a 40 delta on your call side and your put side. Okay, question from Truth. Based on your experience, how long do you stay in the trade before you see any meaningful gain or loss? Or hopefully not. Yeah. So you can use and it looks like Cam just answered there. These are largely time decay dependent. So they can be a little bit frustratingly slow. This isn't a long call or long put. And so you may look at it and going, hey, the stock is staying neutral, and you think it's doing really good, and you look and you have a $20 gain or something, some kind of disappointing gain. So you do need to be kind of patient on it. Now, our front month is only 21 days out. Our front expiration is only 21 days out. So probably a little quicker than if it were longer term, but you do need to be patient on that. To estimate profit loss and gain on that, what I'd suggest is, let me go back here, is you take advantage of your risk profile page. How am I forgetting what trade we just, oh, we did Google, okay, Alphabet. Go down here and you can look at your scenarios and you can look at the dates here. So as you move this date forward in time, you can look at the purple line and that'll give you a hint as to your profit or loss on any particular day. So go ahead and play with that. All right, everybody, I'm out of time basically. So this is kind of a companion piece, so to speak, to last week's session where we introduced calendars. This week we extended it out to double calendars. I didn't have time for trade management on this one, but basically what we're going to do is our Amazon trade is doing fairly well. This is just the calendar spread. It's hanging in there. We're going to stick with that one. We're not going to do anything with that one. Google, we just entered. Lily is an iron condor that's doing quite well. I'll double check that after class and see if we still have 14 days. So we'll probably look at that next week. And UNP is only 7 days to expiration. We're probably going to close that one out. We've rolled this a couple times. We've rolled the put side up a couple times to bring in credits. So this one's the one that I was referring to where it got super bullish on us. We've tried to roll to bring in credits to offset some of the gain. I think we're still at a little bit of a loss on this. We've closed out trade, so it's not going to be reflected in the PL Open. But with only 7 days to go, we're probably going to look to exit that. So we looked at calendars, double calendars. We talked about those. And I appreciate you joining me today. Make sure you check out some of Cam's classes as well, including a Getting Started with Technical Analysis class. I believe Cam is in charge of that class. It's a wonderful class that occurs on Mondays if that hasn't changed. Check that out. And Cam, thanks for helping me out on the chat as always. Appreciate you all. We will see you all same time next week. Bye-bye, everybody.